Martin Turner here. This week, Maria Tyler leads the lecture as we look at restating our firm's statement of changes in equity, how to link cells in Excel, and the difference between operating and financial activities of our firms. Let's start by looking at restating our firm's statement of changes in equity.
Over weeks 5, 6 and 7, which remember weeks 5 and 6 are separated by the break week. So over the 3 weeks, excluding the break week, we're going to be looking at analysing financial statements. So in particular, what I'm going to do in those 3 lectures is give you hints and tips and cover some of the additional information you might need to know to do with your assignment 2, which is to do with restating steps. So in week 5, I plan to cover points surrounding restating your statement of changes in equity. In week 6, we'll move on to the balance sheet, and then week 7 will all be about restating your income statement. Now, because we have the break week in between, usually students like to try and, sort of get ahead on these restatements, which is great. So if you feel like you're on a roll after today's lecture and you want to jump straight into restating, most people should have their feedback from assignment 1 now, so you'll know what to correct before you can move on with assignment 2. But if you'd like to jump into your restating and start working through them, that'll put you in good stead before we move on to week 6 and 7, which is continuing all the tips and tricks. So this is a very exciting time traditionally. It's the time when you'll feel most frustrated, but also most elated when you actually do get things to balance. So this week, I'm going to look at, in particular, the statement of changes in equity. But before I do that, I will just cover some of the common questions that we get in our unit so far. Then we'll look at what restating means in our unit, because it's different to the restating that some of your firms have done, including Wesfarmers. And then we'll look at how you can prepare to restate, what you need to do to move on with that section of the assignment. And then I won't actually go through the restating itself because I've pre-recorded separate videos showing you step-by-step how to do that. But what I will do is go through tips on restating the statement of changes in equity. And then we'll finish up with your questions and your insights about what you might have learnt today. So some of the common questions so far, the first one we always usually get is about restated figures in a subsequent annual report. So why do I have restated figures in a subsequent annual report? That's different to the restating we're going to do. Companies are allowed to change policies that they use to prepare their financials from year to year or from period to period. If they do, however, change policies in a certain period, they have to then go back and restate or re-prepare the previous period's figures as if those figures had been prepared on the same basis as the current figures, using that same policy that they've changed. So that's what the companies are calling restated figures. They've changed some sort of policy or underlying way that they have prepared this year's figures, then they have to go back and restate the previous year's or previous period's comparative figures using those same changes. Okay, so that the user of that report is being able to compare apples with apples. And your company, when they do that, to let users know that those previous figures have been restated, they usually put up the top restated. Okay, so in the pre-recorded videos that I prepare showing you how to do the assignment for Wesfarmers, you'll see that Wesfarmers has a restated income statement, okay, for the previous comparative year. And usually you can find out what policies or procedures your company changed by reading through the notes to their financials. Usually it's in the first few notes, usually either note 1, 2 or 3, where they're talking about significant changes in accounting policies or significant statement of accounting policies. So that's all about what firms do to restate. Okay, so you might have restated figures because they've somehow changed the way they've prepared figures from a previous year. They've gone back and had to restate those previous year comparatives. Now, these next 2 questions, I guess the answer is the same. So the first one says, why does my income statement have percentages in it? And why does my income statement have so many different profit lines? And that's a really, both of those are really good insights, but this one in particular, why does my income statement have so many different profit lines? That's a good insight because there are really a number of different totals for profit in your income statement. You might have, the first one might be a gross profit. Then you might have earnings before interest and tax. Some companies might have earnings before interest, tax, depreciation, and amortization. Then some companies will have companies' profit after or before discontinued operations. Then we'll have profit after tax and interest, and then net profit after tax. So there's all these different totals for profits at different points in an income statement. And some income statements, some companies even include percentages in it. So one of the Mackay companies had a gross profit line, then they had a whole other section immediately underneath showing a different way of arriving at that same gross profit line. And then they had another line under that showing the gross profit percentage. So we had to make sure that we didn't include all those extra lines when we were entering the income statement for that particular student. And the reason that they have so many different profit lines and so many different, so much extra information is because financial statements are general purposed financial statements, okay? That means they have to serve a wide range of users who have different reasons for using that financial information. So they figure if we can put lots of different and extra information in, hopefully it will appeal to one or two of those specific users. So for example, managers might be interested in earnings before interest and tax because they say usually interest is a financing decision, not an operational decision for managers, and taxation is legislated by the government. So again, that's outside of their control. So they might be focused on or remunerated on earnings before interest and tax. Whereas a shareholder might be interested in the final profit figure after everything has been deducted. They might like to know what the final profit or loss is for that company. So there are extra information, there's so many different profit lines because they're trying to appeal to so many different users of those general purposed financial reports. And as you continue your learning journey in accounting, you'll at some point in another unit come to prepare specific purpose. Actually, we do even touch on that when we cover budgeting. We look at the difference between having general purpose financial reports, which is what everybody has with their companies, to preparing specific purposed financial reports. So the short answer to that long explanation was, why does my income statement have so many different profit lines and percentages and other figures in it? It's to provide more information to all the different users of that general purpose financial statement. Do I use parent or consolidated group figures? This is one that always comes up almost every week. Please use your consolidated or group figures. Okay, and if you didn't do that in your assignments, we would have told you that to go back and use your group figures or your consolidated figures before you move on with assignment 2. So remember, your companies can own a number of different companies. We usually call the parent that owns the companies or controls the companies the parent. And we call all of the other companies that it controls, we call them the children or subsidiary companies. Okay, so the other companies, the subsidiaries, must include or provide that information to the parent company in order for the parent company to prepare consolidated or group financial statements. So please use consolidated. We want you to use the whole group figures. Okay, what do the little note numbers mean? I think I explained this in one of the pre-recorded videos, but basically they are giving you, so the note columns in your financial statements gives you a little bit extra information on that particular line item. So for example, with Wes Farmers, it just has one line in the income statement for revenue, just lists literally revenue and then a big figure. If you want to know a little bit more about what that revenue is comprised of, you go to the note, you scroll right down till you get to that note, and then you can read through it, and it shows what makes up that larger figure in the financials. It also can provide a lot more other information that can help you in your decisions surrounding those figures in the financial statements. Sometimes, though, it's still not enough. The notes still don't provide enough information. You might have to try and contact the company if you want a bit more info. So the little note numbers are references to the notes pertaining to that item in the financials. Do I have to enter all of the columns in the statement of changes in equity? I haven't had this one for a while, but no, you don't. You just enter the total column. And for those that watched the pre-recorded video, that's said a few times there. I noticed I must have said it so many times that a few of the assignments I was marking, they actually had it as a little comment in the comment section of the assignment saying, only enter the total column of the statement of changes in equity. So you only have to enter that total figure when you are entering a statement of changes in equity. And that will make that will make life a lot easier, and then you will be able to restate that, which is what we're going to cover today. Now, I'm going to turn this one over to you. I'm going to ask, so a number of students have actually asked me for Excel hints and tips and tricks. And there's lots and lots of resources out there that are free and available that can help you to use Excel and build your skills. But very briefly, how do I enter formula in Excel? Can anybody tell me what button you press or what clicks you need to do to enter formula in Excel?
I just press equals sum brackets, whatever the cells are, and then close the brackets, and that's how I do it.
That's great. I always say just press the equals. Equals will start you, and then you can follow on with any other formula you like. Anyone else got anything different?
Formulas don't always have to be sum. There's an if formula which can help you work out if two figures are different, which is handy for checking. There's also average formulas. It's pretty much endless.
And Jessie, that's Jessie from Mackay, by the way. I recognise Jessie. Where can they access those formulas? If they want to have a look at the huge range of formulas available in Excel, what's the little click button that they click on?
It's along the tab thing along the top of Excel. I think it's called formula or something. You can also look online if you're looking for something specific.
Yep, that's right. So you can always press F1 to help. But so Jessie's right. If you look sort of just above where your cells are, you'll see the formula bar. So you can actually even click in there to start your formulas. And there's a little FX button just adjacent to that area. If you click on that, it will bring you the entire list of available formulas, and you can start searching. Or if you already know the similarity or the start of the function that you would like, you can start typing it, and Excel will prompt you, bring up a list of similar functions to what you were typing. So, and if that's all confused you, just press equals. So Excel, I had a couple emails actually about Excel in general, how detailed, and Mackay in their tutorials last week said, how deep do you want us to go with Excel? And I said, that's really up to you. The assessments in our unit are designed for you to make the most of your own journey. So if you just want to do the bare minimum and just type all your figures in and not use any formula, which is what some students did do, that I marked in their assignment 1, then that's up to you. Okay, I definitely advocate you to use formula, and you will definitely need to link for assignment 2. But how far you go from there in terms of making it pretty, learning all the formatting options and so forth, that's really just going to benefit you. Okay, so in the real world, I found that Excel skills are quite highly sought after, and presentation means a lot. So if you can take the time to learn all that now and present your assignments neatly, it will serve you better in the future than just doing the bare minimum. Okay. Any other questions that we should probably go through before I move on to restating? All right. So restating in our unit simply just means to move line items around. So you're not redoing or rewriting your income statements or your balance sheet. You're not changing anything with your financial statements. All we are doing is regrouping all of those items into a different classification. Okay, so we're just simply moving line items around, which is why it's so important for assignment 2 to know how to link, because then you don't have to retype everything. You literally just press equals, you click into your original assignment 1 entered financials and click in the cell that you want and hit enter. That's how good it is when you use formulas. So restating is simply just rearranging all of those lines you've already entered in assignment 1. It is not the same as companies that restate their figures for various reasons, as I explained earlier, such as changing their accounting policies. Okay, it's a different sort of restating. So when we restate in our unit, we are simply just rearranging the groups that those line items belong to. Okay, and we rearrange them into 2 main groups. And I'm going to see who's read chapter 4 in a minute. So you will need to read chapter 4 of the study guide. So let me see if I can go and find chapter 4 for you now. So we've got study guide, should be on the top right-hand side. And let's have a look at chapter 4. So this is on your Moodle page. So if you haven't opened chapter 4 yet, please open it and save it, because you're going to really use this a lot over the next few weeks with your restating. So chapter 4 is what we want. You will need to read all of chapter 4, but in particular, there are sections here that I will focus on in the next 3 weeks of lectures, so weeks 5, 6, and 7, that talk you through how Martin restates Ryman Healthcare's financial statements, okay? And this is where, in the pre-recorded videos that I've done, this is where I've based all of my diagrams and how I restate Wesfarmers from. So this was the Bible, this was the beginning. Now, who has read chapter 4 and can tell me what we are restating in our unit? What are we moving line items around into? What are the 2 groups that we are moving line items around into? Does anybody know?
I have read it. I'm just trying to figure out what it's called again.
I'll let everybody just think on that for 2 minutes. And if you remember, you can let me know. Why are we restating in our unit? So this is what we are doing. I've covered what we're actually doing. Now we're going to cover why we are doing it. Okay, we are asking you to restate, not for the sake of learning to restate into these 2 groups. We are asking you to become familiar with your general purpose financial reports and also to gain some Excel skills. Okay, learning to restate is just an additional useful skill that you might be able to utilize in the real world, okay, even with perhaps some of your own personal financial investing and so forth. So why are you restating? Yes, you have to go through line by line. You don't get out of it any easy or cheap or quick way. There's no cheating. You literally have your own company, and everyone's company is unique, and in order to restate, you need to know what every line is. Otherwise, you won't be able to classify it into these 2 groups that we're going to discuss soon. So why are we restating? It's really to help you learn about or become familiar with financial statements, the common items on financial statements. So when you are exposed to those in the real world, it's not the first time. You already have a background knowledge, and hopefully that knowledge will be quite solid because you've had to make sense of that for yourself with your peers who are on this learning journey with you in our unit now. Okay, and also, as I stated earlier, it's about you learning to use Excel and really make the most of it at this time at uni. You can be as creative as you like. This is the time to try out things. Okay, so when you get to the real world and your boss asks you to prepare a template with pivot tables in there, you know what that means and you know how to do it. And it's not something that takes you a long time to do because you've already played around with that and learnt how to do it here at uni in this unit. Okay, so we're restating, not about learning to restate in itself, although that is a useful skill and it's one that Martin used in his real world experiences, but it's more about becoming familiar with financials and also improving your Excel skills. There are no shortcuts. There's no minimum time. Martin indicates a time that you might like to spend on this section of the assignment, but that will depend on your own background, your own current skills. For example, your Excel skills. If you've never touched Excel before, it might take you a bit longer. If you're an expert guru, it might take you a bit quicker. And just on Excel gurus, if there are any out there, and they always are, and you see something I've done in one of the videos, or you see a question that your peers have asked, please help them out and please let me know, okay? Because it has happened in the past where I was doing something one way and a student contacted me and said, I've got such an easier way for you to do this. And I've loved that because now it saves me time. So I'm always learning as well. So if you see me do something on the videos and you're like, oh, I think I've got a better way of doing that than Maria does, please send me an email because I'd love to hear from you. Okay, start by reading chapter 4. So it's okay if you haven't, and it's okay if you've read it and you still don't know what it says, and it's okay if you read it 3 times and you still don't know what it says. When I first started teaching this unit, restating for me was also new to me. I hadn't done it in the real world, and I was trying to help students do their assignments, and I didn't know what I was talking about. So guess what I had to do? I didn't ring Martin and let him know. I just read his chapter 4, and in my little brain, I had to make sense of it because it was all new to me and I didn't really understand why he was doing it or how he was doing it. And I didn't want to tell Martin that. So, so I sat down and I started reading it, and I must have read it probably 10 times. And I said, right, I need to make a little structure for myself so this sits in my own brain and I understand what I'm doing. So then, and hence out of that has since come all the videos and the diagrams that I show you in the videos. That's from my learning journey of learning how to restate over the last, well, it's probably been a decade now, Martin, actually, of restating with Martin. So, so that's what we want you to do, okay? If you feel overwhelmed, that's a good thing. It means that your brain's taking on a lot of new information, and just know everybody feels overwhelmed. I don't think I've met one person yet who said, oh, this is so easy, I can do this. It's no worries at all. Everybody I have met, including me, has struggled with restating at first until we understand it. And in my position, obviously, it was a lot more important for me to learn and to be able to explain that because I had to help other people. Okay, so keep chapter 4 handy as a reference. I still refer to chapter 4 in your videos that I prepare for you. It's not hard, okay? I hear lots of students scare other students sometimes, especially in the Mackay classes, because they've got friends who've been through the unit the previous, and they're, oh, you know, it's so hard. It's not hard, okay? It's just new. And there's lots of resources available on Moodle to support you, and they never used to be. When we first started, there was none of my videos. There was pretty much just chapter 4. So we've come a long way from that, from student feedback. We've got exemplars now. We have all my supporting documentation and so forth. So there's a lot more resources. So don't stress before you've got to the task, and don't listen to, you know, your friends who finished the unit last year and were freaked out about it. It's not hard. Just like everything new, it will take you a bit of time to get into, but it's also quite rewarding. Well, I think so. When you get through it, you can feel the skills that you've achieved from actually going through that process. Okay, let me just see. Yes, okay. So I'm still getting to the 2 groups on the next slide. Hopefully everyone who's read chapter 4 has remembered what they are. But I'm not going to go through what we do in restating because I've already recorded 3 separate videos on how to restate the statement of changes in equity, then the balance sheet, and then your income statements, whether you had 1 or 2. You would have entered them as 1 statement now already and had feedback from your assignment 1. So you can't really start until you get the feedback from your assignment 1, but I understand that we're pretty much on top of that. So I think, Martin, is that right, that everyone who's submitted to date now should have feedback from assignment 1?
Marked everybody's. There's still just a few we're marking, and also we're marking the things a little bit late at the moment as well. So
okay.
I posted something on our Facebook page this morning, just giving an update on that.
Very good. Martin's all over it. Thank you. So you do need to wait for that feedback before you can start. But once you start, those videos are already there. And I've had 1 email from a student already going through starting their restating, which is good. You're keen getting into it. So I'm just going to, it's moved to the right-hand side of Moodle now. So I'm just going to go back and show you. So here's your Moodle unit. Just underneath the study guide, top right-hand side are videos. So if you click on this videos link, This is all of the pre-recorded videos that Martin and myself have done for the unit. So we're up to this one here, restating the statement of changes in equity. Then in week 6, well, before week 6, hopefully, if you can get to it, maybe even in the break week, you can start going through this one, and also the income statement, okay? Now, they differ in the length of time that it takes to watch these videos, but the good thing about it is you can pause, rewind, fast forward, rewatch, and so forth. They're always there to help you out. Okay, so the one that we're covering today, the Statement of Changes in Equity, you can see it's not even 12 minutes long. And that's restating Wesfarmers' Statement of Changes in Equity and explaining it to you. So you can see it's not a very difficult statement to restate. Okay, so go to the left-hand side of Moodle under videos and watch that 12-minute video, and that will tell you exactly, with step-by-step guide of me entering Wesfarmers, how to restate the Statement of Changes in Equity.
Excuse me, Maria. It's Karen, Maria. Is it worthwhile showing students on the Moodle page how you get the material down the right-hand side? You know, that little box up the top, some of them haven't hit that, and so it doesn't come up with the material on that right-hand side. You know, this one here, that one, yeah. See, some of them have still got their screens without it.
Okay, that's a good point. Thank you, Karen. I'm also in lecturer view too. I probably should change to student view, but there is this little box on the top right-hand side of Moodle, and it's called Hide Blocks. And it's a toggle button. So if you've hidden your blocks, you won't be able to see it. Thanks for that, Karen. I didn't even think about that. I always have mine on, so I'd never think about saying that. If you can't see this right-hand side of Moodle, it's because you need to press this little toggle box, the Hide Blocks button, and you just literally press it and it toggles it on and off for you. So you will need, this is a very important right-hand column in our unit. Some units, some units that I'm studying, it's not very important, but in our unit is very important, contains vital information and resources that you will need for your assessments. Okay, so make sure you do toggle that on so you can see the study guide and video. So study guide chapter 4 and videos entering the restating the Statement of Changes in Equity. Okay, now this is where I want to ask you guys and girls what you know at the moment about restating. You need to know, so here's our two groups, O and F, and I'm not going to tell you what they mean until we discuss it. So restating in our unit is all about moving lines around, moving our line items or our financial statements into these two groups, okay, O and F. So you will actually need to know what O and F are in order to restate, and Martin discusses this in great detail, explains it very well in chapter 4. So let's find out your thoughts now. So here we go. I've kind of given it away. Okay, O stands for operating and F stands for financial. But what do they mean? So can anybody tell me what are operating activities and what are financial activities?
Aren't operating activities when companies, well, it's pretty straightforward really. It's operating expenses. So can't think of the right words here.
No, that's good. You're on the right track. To do with operations. So, yep, keep going.
So it'll have information based on, as an example, let's look at stock or look at staff wages, things like that. Am I still getting off topic here, or I'm still...
No, you're on track. That's very good. So the key word you said was to do with operations and operating. So operating activities, anything to do with a firm selling their goods or providing their services on a day-to-day basis, okay, anything to do with their operations. Financial activities refers to how are we funding those operations, okay, and I think I always like to bring up directly from chapter 4. Chapter 4 is going to be your Bible. So I like this figure that Martin has designed. which is based on Penman, 2013. So this is the firm, okay, in the box. Let me see if I can make it a little bit bigger. That might be a bit better. So this is in chapter 4 in the study guide. This is what's so important to read chapter 4, because it's giving you the underlying basis. You need to know the difference between O and F. And I talk about them as O and F in the restated videos. Okay, so operating activities are to do with the operational day-to-day business of running that firm's business activities. So it's to do with your customers and your suppliers, who is helping us to supply our goods and services to our customers. Okay, so this is our operations. And then on the other side, we've got how are we funding those activities. That's to do with all of the financial activities. Okay, and so the two main sources of funding that we can get for our firms comes from owners or shareholders, who are the equity investors, or from an external company or firm or financial institutions such as banks. Okay, they're the debt investors. Right, so they're the two main sources of financial activities. So you have to go through, so first of all, read through what is operating and financial. Martin explains it in so much more detail, but that's a very quick nutshell of O and F, okay, operating and financial activities. So you go through, have a good read, have a reread. You might have to read it like 10 times like I did and start highlighting and trying to make sense of it in your own mind before you can start. And you need to be able to understand what is O, so what is to do with my company's operations, which might be different to your friend's firm. Something that might be classified as O for your firm might actually be F for your friend's firm. Okay, so this is an individually unique company by company, line by line exercise that every person has to undertake. You need to understand what is operating and what is financial. And you also have to understand what each of your line items are in your particular firm's financial statements in order to classify them into O and F. Okay, so when you're restating your financials, what we are asking you to do is move around all of your line items into either operating activities or financial activities. Okay, so that is what we are asking you to do. And in order, that kind of forces you to have to learn about what all of your line items actually are, so that you know what they are, and then you can classify them and justify why you've classified them as O and F. And we like you to think about it and come up with your own classification. Okay, so I do traditionally get quite a few emails saying, oh, Marie, I've got this item. Is it O or is it F? And my response to you will be, well, you tell me and tell me why. And so that means you have to go back and understand what that item is first, and then say, well, I think it's O because blah, blah, blah. Okay, and as I'm going through restating the Wesfarmers financials, I give you hints as to why I've classified something as O or F. So I'll say, oh, this one's O because I know Wesfarmers does this with it, and so that's to do with their operations, and so that's why I'm classifying this as O. Or in this case, I'm classifying it as F because I know that Wesfarmers uses this as part of their financing for their operation, so that's why I've classified it as F. Okay, so we want you to make sense of it in your mind because this is your learning journey. Okay, so here's it's a more detailed view of the firm in terms of operating and financial activities. And the reason I like this, it's very, very, very good, is look where it comes from, okay? This diagram was designed by a student, one of our previous students in the unit. So this is an excellent diagram which shows that student's understanding. They've had to do what I did and read chapter 4 and look through all the resources and make sense of it for themselves. And then they were able to explain it back to somebody else, i.e. their marker in this case, so that someone else can understand it. Okay, so that's pretty good. That's really good evidence of active learning. So again, you can see that the operating side of activities are to do with the customers and suppliers. And Rebecca has actually put in a few additional items which can help her when she's classifying her financials and can help you. So Tash, you were just saying about operating expenses being operating activities, and you're so right. She's actually listed it here, operating expenses. And she's also used the acronyms that we use in our unit as well, which is good. And then on the financial activity side, you can see that she's again split it into the same equity and debt sources or funding for financing the entity, but she's also listed some examples as well, which again can help you when you are deciding whether to classify something as O and F. So chapter 4 really has to be, you must read it. There is no way out from reading it. Start with chapter 4. Okay, that is your basis for restating. All right, enough from that so far. So that's your operating and financial activities, and you will need to know those. Oh, whoops, I didn't realise they were in there, Martin. Sorry. What are operating, what are financing? Did someone actually respond? A firm performing their main operation to sell their product on a regular basis. For example, a supermarket selling its goods. Yep, that's right. Good. That's operating activities. Did I have any responses for financial activities? When a firm is being granted the money needed to produce their own products and perform activities or pay their debts and equities. Yes, that's right. So that's finding the funds to finance or fund their operating activities. So financial activities are all to do with those debt and equity investors providing that finance to a firm. Sorry about that, I didn't read. I should have remembered. Martin would have put that in. Okay, so pages 8 and 9 of chapter 4 are to do with restating the statement of changes in equity, and that's the first statement that we are asking you to restate. It's also the quickest one to restate. Well, for me, it's the quickest one. So what I would like, well, this is sort of what we've already done, really. When you open up your own statement of changes in equity that you entered into Excel as part of assignment 1, I usually ask my Mackay students, tell me what you notice about the way it is laid out in comparison to the other financial statements. And that's when we look at the fact that a lot of companies will represent their statement of changes in equity in a flip format to the other financials. So the other financials usually have the 2 years as columns. A lot of companies will actually put the 2 years as rows in a statement of changes in equity, and they have the different equity items as columns. Okay, not all companies do that. Some companies still flip it the other way and have them consistent. But Wesfarmers, in the example that I show you, Wesfarmers does flip it. Okay, the statement of changes in equity is laid out in an inverse way to the other financial statements. It doesn't matter. Okay, because the way that we've asked you to enter it into your financial statements is to just enter the total column. Okay, so we ask you to actually revert that into the columns as years and the actual items as rows. So if you've been following the step-by-step so far, you'll be fine. You need to use the video presentation after you've read chapter 4. It will make little sense to you to start restating without reading chapter 4. Okay, chapter 4 is the Bible, and it is the basis and the beginning for your restating journey in our unit. After that, after you read chapter 4, you can follow that video presentation on Moodle. It's less than 12 minutes, literally. I think it was 11 minutes 42. So this one is the one that you want. And it goes through, and you'll actually see me restate it for you, literally step by step. And I show you how I classify things into O. I don't think I had any F for Wesfarmers, and how I link it across in the whole video. And I do that whilst I'm explaining it to you as well. I also, when I'm preparing these videos, I don't take out any mistakes that I make. So I don't go back and re-edit and make it look all beautiful. I actually show you when I make a mistake, I will show you how I correct that mistake. And they're honest mistakes, so sometimes it takes me a bit longer than normal to correct it, because I'm literally showing you the steps that I follow to try and correct my mistake. And that helps you, because if you make a mistake, you can go, oh, well, Maria had to go back to this, this, and this, and this, and that's what she did. And the steps that I follow are what I'm going through today, the tips and hints. So every week, for the next 3 weeks, I go through checks and balances. What if things go wrong? How can I check that I've got it right? Okay, so if things go wrong, what steps can we do, and what sort of checks can you make to check that you actually have it right. You think, oh, I've done it, I followed the step-by-steps, it looks pretty good, but don't really know if it's right. Well, here's a couple of little checks, and they're mostly mathematical. So, this should match to this and so forth. I don't think I made any errors when I was doing the statement of changes in equity. I think it was in the balance sheet. Anyway, so here's some checks and balances now. So here's the tips. These are the checks. With restating your statement of changes in equity, that's what SOCIE, SOCIE stands for, statement of changes in equity. Your operating CI standing for comprehensive income. Okay, so when you go through the video, this will make sense because I show you how to split the comprehensive income section of your statement of changes in equity. I show you how to split that CI, the other CI, into O and F. Okay, so when you do that split into O and F, and you get a total for O and F, the total for operating CI should match the total that you are going to get when you do the same thing in restating the income statements in week 7. Okay, so you can't do these 2 checks until you finish restating your income statement. But when you do, these are the 2 checks. And we check that as markets. That's one of the checks we do. Does your operating CI total that you've completed in your statement of changes in equity, does it match the operating CI total in your income statement? And same with financing. Does your financing comprehensive income total in your statement of changes in equity match your financial, should be financial, I've got to fix that, financial comprehensive income total in your income statements? Okay, if you have any. Now, pretty sure this year in Wesfarmers, they actually didn't have any financial comprehensive income. That doesn't mean your firm won't. And in the step-by-step video, the 12-minute video, I state that you should still leave a space in there to show your marker that you actually thought about whether your firm had financial CI or not. And I show you how to do that with Wesfarmers. Okay, so I still have a 0 balance for financial CI. So OCI and FCI, the operating and the financial aspects, should still match the total comprehensive income. Okay, we haven't added anything in, we haven't taken anything away. So all we have done is rearranged our other comprehensive income from our previous, it's all we've redone, all we have done. And we have, so remember there's a difference between other CI and total CI, and we have added that to our profit to get an overall total. So all we've done with restating is simply grouped the other CI into O and F. Okay, so the total should still match the original, and it should also match the total for total CI in your income statement. So that's another check as well. There must be an opening and a closing balance, and the closing balance must match the closing balance for equity in the balance sheet. Okay, because remember your statement of changes in equity is just showing you the changes in equity. So the overall balance still has to match the equity in your balance sheet. The statement of changes in equity is just the glorified extra information version of the equity section in your balance sheet. And of course, it must be linked. Okay, so keep these tips and hints handy. Once you go through the 12-minute video, you finish your restating, then you can check, and you can also go back and correct using these tips.
Maria, it's John from Bundaberg.
Yes, John.
I don't know if it's in the video, but some companies have one line item for other comprehensive income in their statement of movement in equity. So in the case there, you need to go to the income statement and do your O and F exercise there, and then link that back into your statement of movement in equity, because you need to split it out. That one line item, you could need to split it out in the statement of movement in equity. Some students may say, what do I do here? I've only got one line item. But in fact, it's a number of accounts in that one line item in the statement of movement in equity.
That's an excellent point, and it is covered in the recorded videos. So in the 12-minute videos I'm going through, what John has said is very correct, and it does stump a number of students. sometimes in your statement of changes in equity, your company will just list one line and call it other CI. The purpose of restating your statement of changes in equity is actually to split that one line, the other CI, into O and F. But if your company has only listed the one line, then you actually have to go down to your income statements down here, which you have to do anyway. So you're not really having to do more work. You're actually helping yourself out because when you get to doing it in your income statements, you will have already done that little section. So you have to go to your income statements, to the comprehensive income statement, and look at the total balance, make sure it matches first, and then look at the individual items that they've split up and separate those items into O and F. And copy it, we'll link them into your statement of changes in equity directly from where they are in your income statements. And I do mention that in the recorded lecture. So Wesfarmers doesn't just list one line, it lists separated items. So it was pretty good. I didn't have to go to my income statement. But if your company just lists one line, then you do have to split that one line into the actual items of other comprehensive income. And you can do that very easily simply by going to the comprehensive income statement and using the split from there. And you have to do that anyway when you get to restating your income statements. So you're actually saving yourself a little bit of time from week 7's work by doing that. Okay, so you do have to split that up. Thanks, John, for mentioning that. Okay, note on linking. So you will need to link in Excel. There are heaps of resources teaching you how to use Excel. And remember, you can start a formula or link simply by pressing that equals button on your keyboard. Okay, so if you've never used Excel before and you're a little bit scared about it, take the time to learn how to use it now. Okay, it will serve you in good stead later on, I can guarantee you. And you need to link. I'm a bit harsh, I penalise if people don't link because the assignment specifically asks you, and you're told in the videos as well as the lecture, to link in Excel. And I think there is actually, in the assignment document, I'm pretty sure there's a link on linking in Excel as well. Okay, so you will need to link. Now, we're getting sort of towards the end here. I just want to spend, actually, I think this is the last key concept for today, but it will take a little bit of time to get through because the term CI, comprehensive income, is very new to everybody, or usually very new to everybody. I've yet to meet an expert on CI, and we all have a slightly different understanding of it, okay? And even how I explain CI, students have said that's confusing to them. So I usually ask for the teaching team to input their views on it as well. And we're going to revisit the concept of comprehensive income in week 7, again, because the income statement also includes comprehensive income. Okay, so your statement of changes in equity includes comprehensive income, and your income statement shows line items of comprehensive income. So they're interrelated. So we'll look at this concept, and I'll recover these exact slides again in week 7's lecture. But essentially, comprehensive income is anything that doesn't fit into your revenues and expenses, your profit and loss statement, but that increases value to the firm, okay, or decreases value, takes away value from the firm. It's the other comprehensive side of value to a firm, okay. I used to call it, and I still, I guess, call it in some classes, I call it what if income, but it's a lot more than just what if income. And I used to say it's what if income because we hadn't realised it. So for example, if we bought land, 50 years ago for $20,000 and we use it in our business, and now that land, if we were to sell it, which we haven't, but if we were to sell it, would be worth $120,000, then there's been an increase in value. But because we haven't sold it yet, we haven't recognised that really. What if we did sell it? Then we would recognise $100,000 worth of profit. So how do we show that to the users of our financials? Well, we will revalue our asset and we will show it as comprehensive income through a revaluation reserve. So we show the $100,000 as an increase in comprehensive income. So we're showing it there even though it's not revenue and expenses. That's why I call it what if. But over a few years, and it has taken actually the standard setters a few years to consolidate guidance and support, I suppose, on the definition of comprehensive income. But the concept of comprehensive income encompasses a lot more than just realised or unrealised, I should say, gains, such as the example I just gave you. Okay, so it includes things like, and so these dot points on this slide are the main ones I've picked out based on some of the financials that I commonly get through every year. So you'll see things in your comprehensive income, such as changes in revaluation surplus relating to property, plant and equipment, actuarial gains and losses from translating financial statements on your foreign operations, effective portions of gain and losses on hedging instruments, okay, such as cash flow hedges. Wesfarmers has these. Gains and losses on remeasuring available for sale financial assets, and this is a relatively recent item as well. We never used to have to separate available for sale assets on our balance sheet, and we have had to in the last decade or so with changes in and updates with the accounting standards. For financial liabilities designated at a fair value through profit loss, fair value changes attributable to changes in the liability's credit risk. Okay, so these are just some of the more common ones. Now, I always read these out, and then my Mackay students say afterwards in our tutorial, oh, that just scared me. Like, there were so many new terms in there and it just freaked me out. Why did you have to read it out? And I'm like, that's good. That's why I read it out. Not because I want to freak you out, but I just want to make you aware that there's lots of new things that you'll have time to explore. You will have to explore. Because in order to be able to classify some of these as O or F, you have to first know what they are. Okay, and we're not expecting you to know what they are. This is why we're introducing you to financials in our unit. So you might never have heard of an actuarial gain or losses and go, what on earth is that? So do a bit of your own research, talk about it with your peers, and read about it in the notes to your company. Okay, your company might actually provide you with quite a bit of information about specific items. So for example, your company might have cash flow hedges and your friend's company might have cash flow hedges, and they might use them for totally different purposes. One might use them for operational purposes and one might use them for financial purposes. So you need to read about what your company does, know your company, know what those line items are, and then be able to justify why you've classified something as O or F. Okay, and that's what we ask you to write about in the Word document that accompanies your submission for assignment 2, for the first steps of assignment 2, the restating steps. Okay, so don't be scared by these terms, I guess. I've also put a link here. This is pretty good, actually, this link. I went through it last year. Doug from Townsville, who was our lecturer in Townsville, he uses IFRS Box quite a bit for his own reasons in his professional life. So it's just nice. It explains how to distinguish your comprehensive income or your other comprehensive income from profit and loss, and it explains it in relation to the changes in net assets of your company. And I really like that because it kind of gives a succinct explanation. It says, all right, is it going to change the net assets? And then there's a little diagram that says, well, yes or no, and it flows through. Well, then it goes in the profit and loss statement, or no, then it's comprehensive income and so forth. So there's a nice little chart there at the bottom. It's not clicking in for me, but you can click on it and have a look at it. So I just want to, at this point, okay, students always say, oh, you've just confused me more. So at this point, I always ask the teaching team to give me a bit of a hand and offer their own explanation, I guess, of comprehensive income or other comprehensive income. So I'm going to open it up to the teaching team, if that's all right, and see if they can also add to the explanations of CI for me.
Maria, John from Bundaberg.
Thanks, John.
My way of looking at it is that the accounting standard setters are continually looking for ways to make financial information more useful to the users. And this split between net profit after tax and profit or loss on discontinued operations and other OCI is a manifestation of that endeavour or exercise. So net profit after tax and discontinued operations largely represent operating flows from which long-term trends can be inferred, and that's useful to the users. And the items in other comprehensive income, the second portion of your total comprehensive income statement, are items from which long-term trends cannot be inferred. And so they separate them out so that the information is more useful to the users.
Yeah, that's a great point, actually. I didn't even think about it in the overall view. Why have we actually got other comprehensive income now? Because you're right, we never used to. It used to just be, you know, the income statement, the end. And it's the other, so the comprehensive income statement it's a fairly new statement in the accounting world in terms of financial statements. And it's there because, again, they're hoping to provide more useful information to the users of these general purpose financial reports. So yeah, thank you for that.
Hi Maria, it's Lois from Brisbane.
Hey Lois.
Basic understanding, not as technical sounding as John, but my very basic understanding is, and how I see it, is that the revenue expenses, the gains and losses that appear in the other comprehensive income, they're there because they haven't yet crystallised. So, and by crystallised, I mean that they haven't actually, the transaction hasn't been finalised, and therefore it's not going to go into the top, the income statement. It hasn't actually gone into that at that stage. But they are making users aware that that is progressively going to go through, or it's, and as you said earlier, it's like property that's been purchased 50 years ago. Obviously, the valuation's increased, but it's not crystallised. The sale of that's not crystallised, so therefore the gain's not crystallised and the tax on that's not crystallised.
Thanks, Lois. Lois does a lot of taxation work in practice. You can tell because she uses taxation terms like crystallise. The only time I've used crystallise is with all my taxation back in my public practice days. But I agree, Lois, I had the same understanding of, you know, it contains mostly unrealised gains, things that we haven't actually, you know, like we haven't sold the land yet. But Martin corrected me on that. I think it was last year. Was it Martin? And you said, no, there are some items of comprehensive income that can actually be realised. And so I was like, all right, well, I stand corrected. But in my brain, that's why I used to call it what if income. Martin, did you have anything? Martin and Karen, I think, are still online.
Karen, Maria, mine is along the same lines as yours, is that, and I know it's a simplified definition of it, but I think of other comprehensive income as unrealised, such as, that means if you think about what realised means, realised includes income you've actually earned and received or are to receive, whereas the other comprehensive income is increases in value or something that will only be realised once the item is sold. And that, I know that is very basic, but a lot of the items would come under those headings. So I agree with Lois, just to make sure that students have got a very basic understanding of what it is.
Yeah, I think my understanding is very basic, and I'm learning new things all the time about what's a new item of other comprehensive income through all your student firms, basically. So I'll sit down with, you know, my local Mackay students, and we'll go through and we'll discuss things as a group and see who's got common items and so forth. Well, we can't really discuss it in person as a group at the moment, but online as a group, you know, and I'll get them to share screens. But I'm always learning, oh, what's that item? What is it? I don't know. Or I don't know either. Have a read of your company and tell me what it is so that I can learn more about what is included in this other comprehensive income as well. Martin, I could see you on screen, but I couldn't hear anything. So I thought I might just see if you were able to unmute your microphone.
Oh, can you hear me now?
Yes, thank you.
Oh yeah, you can see that there's a lot of shades of grey around other comprehensive income, but you can think of it as net profit. That comes out of your income statement. Then you have other comprehensive income, and then you have a total comprehensive income. And what's in your profit is your revenue less expenses. Revenue less expenses equals profit. And so other comprehensive income are gains and losses that aren't part of revenue and expenses. And these gains, and we don't need to get into great complexity about this, but so these are these extra ones, but they are, a lot of them are those that are not in the ordinary course of activities. It's a bit like what John was saying. They might be things longer term, you know, but, or they're various gains and losses that are not part of your revenue and expenses. And also they often have really long, confusing names.
Yes, I agree. That's how I've come to define it now, is other comprehensive income is anything that doesn't fall into revenues and expenses, into the definition of revenues and expenses, but results in a change to your net assets. Okay, so that's my definition. I usually just like to give my understanding of it, which obviously has changed over the last few years. So what I guess we are trying to tell you is make sure that you can make sense of your firm's items of other comprehensive income. And Martin just alluded me to the next key concept. This is the last one now. There is a difference. I used to use the two terms, other CI and total CI, interchangeably. And that's not right. They are not interchangeable. And I mentioned this in the recorded videos as well. There is a difference between other comprehensive income and total comprehensive income. Okay, and past students have alerted me to my use of that. The example that I show is from term 3 2 years ago, actually. I had one of my students email me in that term and say, I'm confused around other CI and CI. He's saying to me, you refer to CI in the restating video, but the figures you are separating come from your other CI. See screenshot below, and he screenshotted it so I can see he's actually listening to my videos. This leads me to believe I'm only trying to separate other CI in the statement of changes in equity and not CI, that is all income. If this is the case, the use of the various terms to describe the two is creating a challenge. Other CI is not total CI. That was what the student wrote to me about. And so I wrote, yes, you are right. And I actually addressed this in one of the lecture recordings for that term. Other CI is separate to total CI, okay? Other CI is all of the items of CI. This is what we're asking you to make sense of for your firms, all right? You will have items of other CI, and sometimes your firm will just list one line for other CI, and you will have to go to your income statement to see all the other items, to see what comprises that other CI balance, okay? Total comprehensive income is this other CI plus your profit or loss. So total CI is different to other CI because of profit and loss. All right, so you are separating other comprehensive income in restating the statement of changes in equity. Okay, you are not separating total CI, but your total CI balance still should match to your total CI balance in your income statements and also to your total CI balance in your original financials as well, okay? Because we're not adding or taking away. Remember, we are just rearranging other CI into O&F, all right? So I just wanted to point that out. Other CI is different to total CI. So the student then said, thank you for that response. This is where it all gets confusing. Referring to CI to me means all or total CI, which is what I assumed when you said CI. Hence, I thought this meant income from the profit and loss and other CI. But we only need to separate other CI, not the profit and loss items that make up total CI from the income statement. Okay? So I'm sure you can appreciate, with all the acronyms and terms being new for many of us, the separation of CI and other CI is key to understanding the actual terms being used. And with my statement of changes in equity having both CI and other CI lines from the provided reports, it created a grey area. So this is why he wanted clarification from me. In short, other CI makes up total CI, but there is no need to separate the part of total CI that comes from the profit and loss to give your net profit or loss. Okay, so you're not restating revenues and expenses in your restated statement of changes in equity. You are only restating other CI. That's a very good point. I do mention that in the recorded videos. You only need to separate other CI, which is your items of comprehensive income, into O&F when you are restating your statement of changes in equity. Okay? Total CI is your profit or loss plus your other CI. So other CI and total CI are separate. And again, we will revisit the concept of comprehensive income because we all love it so much. Well, you will by week 7 when we look at restating the income statements. So your turn now to talk to me. We've got about 20 minutes or so. Tell me what was the most important thing you learnt today and what questions still remain unanswered in the next 2 slides. So I'll give you, I have to time it because I'm never very good at timing this. So I'll give you a minute to write down an answer for each of these. So what was the most important thing you learnt today? What questions still remain unanswered? We've got 295 available submissions and 0 responses yet. Okay, so just put my little timer on and go.
Marie, I'm not actually on Echo. Do you want me to swap out?
You should be able to, so you shouldn't have to be on Echo. I mean, you can access the slides through Echo, but you can also access them through Moodle. So if you can go through to Moodle, just scroll down to week 5 and just click into week 5 lecture slides just there. And that should get you straight in. And then you can click into this little funny looking thing that brings a thumbnail up of all your slides and just click into slide 24 and then type your response in to me. So 2 responses in for both of those. So I'll start going through them. And teaching team, at any time, please feel free to jump in as well and offer your thoughts because you certainly enrich our classes. What was the most important thing you learned today? Restating and learning about CI. Well, I'm glad, but what did you learn about CI in amongst our discussion? I'm looking forward to getting my teach into this next L sheet. Good. That's good. I really like it when, like, it was hard when I first started restating and I really had to spend some time to make it make sense to me. And then I had to spend time to make it make sense to others to be able to teach it to you guys. So, but it was rewarding. And I really like that I do understand the process now and I can explain and help others. And you might find the same thing. You might find that you're getting such a good enjoyment out of it that you can actually help out others when they post their questions. And we encourage you to do that because everybody's firm is different. So you can't copy from someone else's. And you can actually collaborate by sharing and discussing your ideas with your peers. So very good. I'm glad you're looking forward to getting into it. That CI is total comprehensive income, profit plus, so profit or loss plus other CI, and other CI is all the items of CI. Very good. That's the only thing you learnt today. That's great. Okay, hang on. I'll just toggle that back. So again, the most important thing I learnt was that total CI equals profit loss plus other. The difference between other CI and CI. Other CI equals what does not fall into revenue or loss. Good. That's good. That's an excellent insight. That's how I explain it now. That's my go-to definition. It used to be what if income. Now it's not. Now it's whatever doesn't fall into revenues and expenses, but changes the net assets of your firm. OF and CI, these are going to be very important during restating, which is right. So operating, financial and comprehensive income, and again the difference between those two. that you only need to separate other CI into O and F. That's good insight too. Just for the statement of changes in equity, you only need to separate your other CI. That's the only part we restate in the statement of changes in equity. To clarify that operation activities is data and financial activities is how it is all funded. Very good. Equity investors, shares or bank loans. To read chapter 4 in order to make sense of restating. Very good. Yes, please do read chapter 4. I haven't had time to read chapter 4, but with this lecture, I think the most important thing I've learned is where I could find all the resources and why you have recorded the videos the way you have in order for us to understand how to fix mistakes, etc. Finally, what order I should work in through the steps. Very good, yes. And there are resources now to help you because of student feedback. So students said, look, we don't know what we're doing. We need some extra resources. And so Martin said to me, could you record something? And we've come up with all those videos to support you now. What is CI? So again, that's good, but you can explain that to me. So even just another line that said, I've learnt what is comprehensive income. So, and I've also learnt the difference perhaps between other and total comprehensive income and just explaining it. How to tell the difference between operating and financial in other CI. Well, I don't think I covered that today, but we did cover what is operating and we did cover what is financial. So you may have a basis for starting to restate your other CI. I learnt that other CI is different to total CI and they need to be separated in the statement of changes in equity. So they already are separated in your statement of changes in equity. Your firms will already have done that for you. What you need to do with restating it is to classify your items of other CI into O and F. Okay, so that's very good. Let's have a look at what questions you still have. When would comprehensive income be operating income? Is all income operating income? Is there such a thing as financial income? Is other comprehensive income closer to economic income than accounting income? Oh, this is very good. I have to ask. Who asked that question? Own up for me.
I copied them and stuck them in my KCQs too.
Oh, very good, Jennifer. That is excellent. That's really good insight. Okay, so when would comprehensive income be operating income? This comes back to Lois, mine, and Karen's initial understandings. So my thoughts on comprehensive income when it first came out was it's all the unrealised income. So it's things that we could make value or that could lose us value, but they haven't yet because we haven't actually transacted. We haven't actually crystallised it in Lois's taxation terms or realised it in our accounting terms. And at such time when we do crystallise or realise it, then it moves into operating income. Martin alluded me that that's probably not entirely accurate. It comprises a lot of that, but there are also areas which include realised gains and losses, which aren't revenue or expense. Okay, in that case, they have to be comprehensive income. So when would comprehensive income be operating income? I would normally say when it's actually realised. And there are items of comprehensive income that actually are classified to operating, so they get reclassified to your profit and loss statement when you do realise it. But then there's items of comprehensive income that don't ever make it to your profit and loss statement. Okay, so when would CI become operating income? It may not. It may never ever be, depending on the item itself. And other items may become operating income at such time when we do realise them. So that's why it's really important to know what those items of other CI are, because some of them never ever make it to the profit and loss statement. And some of your companies actually use headings, items that will be reclassified subsequently to the profit and loss, items that won't be ever reclassified to profit and loss. Is all income operating income? No. All income is not operating income. There are some extraordinary gains that don't happen. There are some discontinued operations, which is current operating income, which may not be future because they're discontinued. And there is such a thing as financial income, and you actually have to separate it as part of you're restating your income statement. Okay, we require you to. And if you can't separate it, I show you a little method where you can calculate it based on your firm's cash balance. So there is such a thing as financial income. Interest is financial income, okay? And that's usually what we ask you to try and find or calculate as part of your firm's restating your income statements. So yes, there is such a thing as financial income. Is other comprehensive income closer to economic income than accounting income? I love this one. This is why I asked. I was like, who asked this question? This is fantastic, because you're actually starting to include some other prior knowledge that you have, or link some other subjects that you're doing, such as economics right now, principles of economics. So other comprehensive income, I wouldn't say it's closer to economic income. Economic income includes, or it considers, the key concept of opportunity cost. Okay, so normal accounting income as we think of it is profit and loss, revenues minus expenses. When we factor into our profit or loss the cost of our capital, the opportunity cost of that capital, where would we have parked our funds if it wasn't in this business? So when we take into account opportunity cost, we get economic profit, the idea or concept of economic profit. And that's another key concept we do cover in the unit in upcoming weeks. We actually ask you, as part of the later steps of assignment 2, to calculate your firm's economic profit. Okay, and we make you factor into that calculation the opportunity cost of capital through a weighted average cost of capital or similar. Okay, the assignment actually just says you can use 10%, but in my videos, I show you how to see if you can find your company's particular cost of capital. So I really like this one. This is a fantastic question. I wouldn't say other comprehensive income is closer to economic income than accounting income. I would just say it is a different perspective on income. Okay, just like these are two different perspectives. So you have accounting income, then you have economic profit or loss, which again includes the concept of that opportunity cost, the cost of capital. Comprehensive income is more focused on value. Okay, what changes in our business assets have we had, and how do we classify and report those? Do we classify as profit and loss or comprehensive income? So I think it's just a different perspective. That's my take on it. If any of the teaching team have any views, let me know.
Thanks, Maria. Awesome.
Was that good? Okay, good. I'm glad that answered it. What questions remain unanswered? I don't know. No questions. How to begin assessment 2? Well, I would start by reading through the assignment requirements, but then once you get to step 3 of your assignment 2, that's where you have to do your restating. I would read chapter 4. How do you begin assessment 2? Read chapter 4 of the study guide, and then watch that video that I showed, this restating the statement of changes in equity. I still don't quite understand what CI is. Don't worry, neither do I. I'm still learning about what it is. Also, I will have to look around at what on my financial statements to see what would classify as owed. Yes, everybody's going to have to do that. Everybody's going to have to look through items, every single item on their financials, and classify it either as O or as F and justify why. And we get you to write that out actually into your Word document as part of this section. Why are there so many different ways to set out financial statements? Well, because there are so many different companies and there are so many different users. Generally, though, financial statements do have common elements. Okay, so they're not all totally different. There's not so many different ways to set them out. So they generally do have a specific format and function. In some cases, particular sections of financial statements are mandated in how we present them. But within those restrictions, firms still have a lot of leeway into choosing how to represent their financials, simply because they're trying to serve a wide range of users. Okay. Which figures for my company would go into O and F? Oh, you have to tell me that one. You're not getting out of this the easy way. You have to read chapter 4, what is O and F, understand it, and then go through every single item on your financials and tell us. Don't have any questions. My company doesn't have any input for other comprehensive income. So, oh, I'm worried about how you'll complete the step. Neither does some of my Mackay students. If your company doesn't have any items of other comprehensive income, then guess what your statement of changes in equity, your restated statement of changes in equity, is going to look almost identical to your original statement of changes in equity, except that you're just going to show us that you thought about it and put operating comprehensive income and financial comprehensive income and just have zero balances. Okay, and I mentioned that in the video. But that's fine because there's nothing, they have no items of other CI, so you don't have to restate it. How to sort other comprehensive income into O&F, what to look for in order to, so you need to understand what O&F is, and you need to understand what each of your items of other comprehensive income is. Once you understand those, you will be able to classify your other CI into O and F. That's it. That's all the questions. I know it's a lot to get through. We did make it in time today. We've got the break week next week, and then we will come back in 2 weeks' time for a lecture on the balance sheet. So what I did today, but just on the balance sheet, and then again in week 7, we will finish off the restating components with the income statements. So I won't be in this room in week 6. I'll be in a different room on the early campus. So you'll see a little bit different behind me, but the content will still be covered regardless of where I am. So we're about to cut out. So I'm going to say thank you and stay safe.